Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss the PHLX Semiconductor Index, what we call SOX, or the SOX Index performance, and what's driving headlines within the semiconductor space. Mark, it's great to see you as always. Welcome back to Trade Talks, and let's kick it off with an overview of SOX performance.
Thanks, Jill. Great to be here as always. Semiconductor is always a big source of headlines in the financial media. Things like supply chain issues and inflation heavily impacting and being impacted by the industry. If you look at year-to-date performance, after really several years of nonstop outperformance with respect to the general market, semis have been cooling off a bit this year. You can see year to date, as of yesterday's close, they were down just over 28%. That's the PHLX Semiconductor Index that you mentioned, SOX. I have another semiconductor index listed here, SOX. That's a global semis index, also calculated by Nasdaq. That one is quite a bit broader. It's about 80 companies, a lot of them based outside the U.S. The SOX is only 30 companies, and those are U.S. listed only. So you could see globally a bit of underperformance there versus the SOX, and then versus something like the Nasdaq 100, which is down 24.5% year to date. Pretty close, right? Pretty much in line with that tech-heavy, growth-heavy benchmark. And then finally, you can see the S&P has rallied a bit also recently and is now down only about 17% year to date. So real underperformance versus the broader market, but kind of in line with what you're seeing generally with tech and with growth.
And Mark, if you look at the top 5 constituents of the SOX index, how are they performing?
Yeah, so these are the top 5 weights. The way this index works is the top 5 get capped at 8% each, index weight at each rebalance. So together, these make up about 40% of the index. That's why we're highlighting them. You can see a bit of divergence here. The two bottom lines, NVIDIA and AMD, those have been two of the highest flyers over the past several years, both down around 40% year to date, both having, really solid fundamentals, I would say, in terms of, continued growth. But just given how far their valuations moved ahead over the past couple of years, especially since COVID, they're being impacted the most, I think, by headlines around interest rates and the impact that has, the downward impact on some of the highest growing names. The others that you can see there, Intel and Broadcom, that's AVGO, those are pretty close to each other, down around 23-24% year to date. Intel, of course, one of the few kind of major fab semi companies left, meaning they actually do the manufacturing of semiconductor chips. They've had quite a number of headlines over the past couple of years around general strategic reorganization of the company. And then Broadcom, of course, a couple months ago announced what probably will be the biggest acquisition by any semiconductor company in the history of the industry when they look to acquire VMware later this year. And then really the outperformer here is TXN, Texas Instruments, down just over 13% year to date. Not one of the high flyers in recent years, not what you would call necessarily like the most cutting edge semiconductor company, but as you see with other parts of tech, some of the older, more value-oriented tech names actually have been outperforming this year, and that's kind of what we're seeing in this index as well, with Texas Instruments outperforming these others.
And if we take a more holistic 5-year, longer term look, we can see that outperformance that you were talking about at the top.
Yeah, exactly. So you can see on a 5-year trailing basis, we're still up 150% in price return terms on this index. That is still good enough to be beating, not only the S&P 500, which is up 58% in price terms, but also the Nasdaq 100 by a pretty solid margin, which was up 103% over the last 5 years. So again, all kind of has to be put in context. There was a really big run-up and a really big divergence in the last couple of years, given the increased demand for a lot of electronics that use semis. That may have run the index up a little bit too far, too fast. But fundamentally, there hasn't been all that much of a change again in the overall demand story. This industry still has a lot of structural secular tailwinds going for it.
Right. And finally, Mark, what are the headlines that are moving the space today?
Yeah, so really the two big ones are one from the kind of governmental policy arena, which is the headline on the left here. This has been in the works for, I think, over a year already. This is called the CHIPS funding bill in the US that is looking to allocate around $50 billion to subsidize chip manufacturing and research within US borders. The US, of course, used to be a leader in semis manufacturing back in like the 80s, and it's gradually lost that leadership position to Japan, South Korea, and other parts of Asia. This bill is looking to really help that manufacturing segment of the industry, companies like Intel and even others internationally, I think like Samsung and Taiwan Semi, to the extent that they're putting together capacity in the US to manufacture semis, they should benefit from this. The US is really, still a leader in semis design with companies like AMD and NVIDIA, but this is going to try to level the playing field that we've been falling behind on. So eagerly anticipated legislation that seems to finally be in its final stages of approval here in the Senate. And then on the right-hand side, the other big headline is earnings. So we're just getting into earnings now for the most recent quarter. Really good start to the season with NXPI, which is a European semiconductor company, but has a US listing, is part of this index. They announced yesterday with a really pretty bullish forecast and some beats on earnings and revenue, talking about how, industrial and automotive end demand is still just as strong as it's ever been. So some hopeful signs there that, even though other parts of the economy maybe are slowing down, there's still a lot of pent-up demand for this space. So something to watch out for over the next couple of weeks.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.